All right, folks, we have more big insider selling happening. And this is on top of all the other insider selling that we've seen, especially over the past 3 to 6 months. It's been enormous and it's been eye opening. Now, what I've said here is they've sold off a lot of stock. It wasn't all of their stock, of course, because that would have really caused people to hit the panic button and exit the markets. They don't want that. So they're selling just enough to raise eyebrows, but not enough to cause market panic. The latest is Bank of America. And this is on top of Bezos. Um, who was the other one? JP Morgan Chase, Jamie Dimon, Zuckerbucks, Warren Buffett going to a huge cash position, the Waltons from Walmart. Bank of America is the latest. Bank of America insiders sell nearly 5 million in stock, possibly signaling caution. Well, what do you think about that? Um, Insiders offloaded a considerable amount of shares over the past year that could have raised some eyebrows amongst investors. Well, when multiple insiders sell stock over a specific duration, shareholders should take notice, as that could be possibly a red flag. And when they look back over the 12 months, including some recent sales, well, there's another red flag for you folks. So, why are we seeing all this insider selling? Is it because everything's fine, the economy's strong, the consumer is resilient? Well, if that's the case, then these investors, shareholders, they shouldn't be selling stock. They should be buying more if everything is what we're told. The economy is resilient and strong, right? All that good stuff that we're being told. Let's talk about this though, because banks, we know, you and I know, and most people probably don't know, but you and I know this whole economic scheme is based on more and more consumption. And to do more and more consumption, what do people need? They need more and more credit. So banks have to keep on giving out more credit, even though we've got debt now way worse than it was during the financial crisis. Normally, that would be a big no no for banks. But banks know that they're just going to get rescued at the end of the day, that you and I will end up paying for it in some way, manner, or fashion. So banks are not pulling back on the lending. Yes, there are some people getting declined for automobile loans, but for the most part, when you look at the key source of spending, credit cards, they're not cutting back. In fact, they're still increasing credit limits, even though credit scores are starting to drop. Delinquencies are starting to increase, right? These should normally be red flags for banks, but the banks know that if they pull back on the lending, they'll be blamed for the collapse, right? So there's a lot of people right now that want to keep their jobs. And I'm not just talking about the Main Street workers, I'm talking about the lawmakers, etc. They want to keep their jobs, right? The quote unquote leaders. They don't want the banks to pull back on lending. And, that's been one of the things I've tried to urge people to realize, right? But it's not just me saying that. Take a look at this. Somebody from within the banking sector actually said the same thing. And look right here. We've got Moynihan out of Bank of America. Bank of America CEO says U.S. economy is vibrant thanks to banks. There you have it right there. What have we been saying? If it weren't for the banks and all the easy money and the lending, allowing people to buy things that they can't afford, that's what makes the economy keep going. That's what avoids the big R word, right? That people are saying it's going to be a soft landing, there's going to be no landing. Um, some people said it was a hard landing, right? As long as banks can keep pumping out the money, you will not see an economic downturn like most people would expect. You'll see a downturn, though, in a different manner, in a different method. And that's continuing devaluation of your dollar, more rising cost of living, aka inflation. Um, so it's going to be one or the other, folks. It's going to be massive inflation. Look out. If the banks are ever held to account and have to watch what they loan out, in other words, they have to have some reserves, and they're still looking at that as far as the reserve requirement, the capital requirements, Basel III. We're going to see, something happen this year. I'm not sure which direction it's going to go, but I think you better prepare for it either way. I'm preparing for both because I don't know which way they're going to yank the levers on this thing. You know what I mean? So Bank of America CEO says the economy is vibrant. Bank of America, U.S. economy has weathered enormous challenges largely thanks to its banks. There you go. The more money they can loan out, the better the economy is going to look, and that's going to prolong any sort of downturn, decline, or correction. But then we have higher cost of living. And what happened just last month? The print was higher, right? Consumer price index was higher. We know the cost of living is still rising, although be it more slowly compared to the peak when we saw 8-9% CPI. And by the way, CPI is just a fraction of the overall inflation. It's really about 3 to 4 times what's being reported out of the government. So long story short, folks, this should be very concerning to people. If you didn't already know that this whole economic growth scam is based on you, me, everyone, the government taking on more and more debt, well, now you know. Even the banks are admitting it now. They're admitting it, right? So now you see why the national debt has to continue um, to get accumulated at bigger and bigger, faster and faster pace, because otherwise this whole house of cards economic scheme comes crumbling down. The bankers know it. Most people, they don't realize how this is happening and why we're avoiding a downturn, even though everything right now is so much worse than the financial crisis. The debt is higher. The bank rescues that we've funneled into the banks now, the helicopter money, it's much more than it was during all the bailouts during 2008, 2009. But people are not really seeing any sort of signs of an economic downturn. What they are seeing, though, is inflation, because they're keeping the system propped up. They're keeping the banks propped up. Therefore, the banks can keep loaning out money. Unlike 2007, 8, 9, where the banks, at first, we saw some bank failures. We saw collapses of some big institutions, Lehman Brothers, and it caused some panic. Now there's not much panic within the banks. So if this continues like this, expect more rising costs. In order for there to be a crash, and people have accused me of predicting a stock market crash, no way, no how. It's going to go higher and higher and higher unless the debt market implodes or unless something breaks to where the debt stops increasing, right? If that happens, then you're going to see a massive correction, deflation, bursting bubbles, right? Falling prices. But otherwise, it's going to be rise, 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 rise. I would not doubt to see the Dow Jones at 40,000, right? If the debt scheme keeps pumping out money, that's what's going to happen. We've got a Fed policy meeting coming up here, Tuesday and Wednesday, with a interest rate announcement. It's going to be continued on pause, but more importantly, they're going to signal the direction of rates. And does it really matter what they say? Well, yeah, a lot of investors listen to what they say, but do they usually do what they say? Most of the time, they don't. First, they predicted 4 rate cuts, then inflation ticked back up. They said they were surprised, they didn't expect it. So now people are saying, okay, maybe it'll be 3, maybe it'll be 2 rate cuts. Um, I mean, who believes them at this point, right? Because so much of what they said before, they didn't really follow up on. Now, another way that the powers that be are keeping this economy running and keeping it from imploding, keeping it from facing a correction or deflation is assistance programs. And we said right here on this channel, they're going to have to keep coming out with new assistance programs. And what do we see? We saw just that over the past 6 months to a year. Student loans are getting a lot of assistance. They're canceling the late fees. They're giving them repayment programs. We've got the FHA loans out there giving the veterans now new ways to pay back their loans, because so many of them were falling delinquent. They had to come out with new ways to kick the can down the road there. Now we've got this. Take a look at this headline here. This is out of the Wall Street Journal. Governments across the U.S. are handing residents cash, no strings attached. And we told you what was happening up in Flint, Michigan, where new mothers were getting a monthly cash payouts for a year. Governments across the U.S., we're seeing more of these programs now, more of these universal basic income type of programs. It's not universal because it's not nationwide, but we're seeing a lot of these programs implemented now. And we said that was going to happen right here. More and more rescue programs. Expect more programs like this to come out to keep this system from imploding, right? But what's going to crack first? To me, it looks like the consumer is going to crack first, because these levels of debt are not sustainable at these interest rates. The credit card debt is mounting too fast. People liquidating their 401ks, record 401k withdrawals last year. We just found that out when in our last episode we talked about that, right? So things are pointing to the consumer is going to be the one to crack first. Now, anything could happen. You could see a series of banks fail overnight. if the helicopter money isn't there in time, or what I've suspected here is they're going to let a lot of smaller and regional banks fail, only to have them bought up or gobbled up by the big mega banks, right? Consolidation, right? So the bank failures wouldn't necessarily cause the entire banking system to implode, because you're just going to have the big banks buy up those toxic assets from the smaller banks, and the big banks have a guaranteed lifeline, helicopter money to infinity. Then that's the way they can do it. They can keep the system going just like that, even with banks failing. All right. So we're going to see how this plays out, folks. I'll be back with another update very, very soon. But word of caution, more insider selling is the bottom line. Park your money wisely. I don't want to see anybody here get wiped out. I wouldn't be picking up pennies in front of a steamroller. In fact, I'm going to be looking to sell off some more digital assets that took a huge run up here, and going towards more cash, just like the big money guys, just like Warren Buffett, just like a lot of the insiders right now, folks. Not that I have a lot of cash to put aside, but the cash that I do have to invest, setting some of that aside, right, instead of being in the markets, if you know what I mean. A lot of risk on the table right now. Be cautious, folks. As always, keep stacking. Talk to everybody very soon. Thanks for watching. Bye for now. Peace.